Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we bring you interesting guests and interesting information on how to generate and create passive income so you can ultimately reach your time freedom point and have the power to decide what you want to do with your time. And so I am super excited today for our guests, especially because they just started something that I've been following along, and I'm hoping our guest Sachin Jhangiani will be able to tell us a little bit about where they are. I'm assuming at least because they have a close relationship, and I'm not going to say it until we get there. So Sachin, thanks for coming on the show.
My pleasure. Thank you for having me today.
Yeah, it's absolutely exciting. And so before we go into this exciting new opportunity that you guys have created, tell us a little bit, how did you get into Elevate.Money and investing and all those kind of things?
Yeah, absolutely. So I actually had a very long career on Wall Street in fixed income as a salesperson, as a bond trader. And so I was around, money management and, investing for a really long period of time. And in that career, I realized that there was a level of sort of access that wasn't really available to people, outside a certain level of wealth. And it didn't really at the time make sense to me, but, it just back then to even make an investment into, let's say, real estate or, different funds or different opportunities, you needed a lot of money to do so. So that was really the barrier. And since the early teens, through Reg A and crowdfunding and sort of the growth of online investing and fractionalizing shares, that has shifted. And now, through bite-sized increments, we can offer investments and opportunities to everybody, regardless of sort of, how much wealth they have to actually invest. And so, when I left my career, Elevate.Money was a really great opportunity to sort of take the knowledge that I had and the expertise that I gained, and to be able to share that with more people in a broader market, and sort of neutralize the wealth gap issues that we're having in this country. And part of that, obviously, it's a public-private sort of challenge that we need the government to do certain things, but also the individual has to take some level of responsibility and say, hey, what am I doing with my money? If I don't have enough, am I just spending it all on sneakers and dinners and whatever, or can I invest it? And prior, you couldn't invest $100 or $1,000. But today you can. So it's sort of our job to bring that opportunity to everybody, and then also articulate it and create messaging around it where they can understand it and see the value over time. And so there's an education and a conversation component, as well as delivering the product.
Okay, yeah, that totally makes sense. And I think that's also where our alignment comes from, because Ideal Wealth Grower is first and foremost a mentoring and educating organization. We bring in people, yes, to share the expertise, yes, to share the relationship, and to basically get them access to all the different providers that we have groomed. But oftentimes we also have people asking, okay, I would like kind of to get into this, but I don't yet have $30,000, $40,000, $50,000 to start out with and outright buy a property or make the down payment on it. You said earlier that you spend a long time on Wall Street, but you also then mentioned a bunch of different investment classes or groups or categories, so to speak. Most people, when they hear Wall Street, would probably associate it either with bonds or with stocks. Is that where you mainly worked in? Or?
Yeah, I was in bonds.
Oh, okay. And so from that experience, now being basically with Elevate.Money in real estate investing, what's the difference? Can you give the audience a little bit of an idea, besides the fact that the amount of money needed is probably different, like you said, but as far as the investment itself goes, what's the difference?
Yeah, I mean, the really great thing I think about real estate for anybody is it is in general easy to understand. Maybe the nuances of an investment are a little bit more complex, but everybody can see a building and they know that maybe somebody rents that building and there's a tenant in there and the owner of that building gets to collect rent. And can make money on that. And so there's a passive income strategy, and it's a hard asset, and it doesn't go anywhere. So, when the markets fluctuate and you might not know why stocks or bonds are up or down, or all of a sudden, there's this violent move in either direction and there's volatility. And if you're not constructed your portfolio the right way, or you're a good trader and you understand it, there's a big gap. But real estate, if the market's going up and down, but the tenant is paying their rent and their business is running and you're collecting the rent, really not a whole lot has changed. So it's really good diversification from the volatile markets, and it's a hard asset that it's sort of physical and has a true income producing component to it. And I think that's what makes real estate. I think most millionaires in America have made money from real estate. So it's a true and tried, it's a universal concept of sort of investing in real estate. It was the first asset we've all ever had. Even back when there was kings and queens, land and homes were valued. So we all understand that intuitively, and so I think that's the major difference. And then obviously, with Elevate Money, we're sort of bringing a more professional strategy to the average investor, because we're pooling different pieces of real estate together. So the investor is diversified. They don't have to go out and buy several properties to get diversification in case something happens to one. The portfolio is doing that. We're managing the loan, so they don't have to get the mortgage. The company gets the mortgage. They don't have to manage the lease maturities and the management and the tenant payments and all of those things. And so it's a hassle-free way of clicking a few buttons, and in 4 or 5 minutes, you can own a portfolio, a fractional share of a portfolio of real estate that's professionally managed.
Okay, yeah, and I think that makes sense. And there are quite a few things, I believe, if we really go through life and pay attention of what we are exposed to or what we're experiencing on a regular basis, where this situation of conceptually simple but kind of complex under the hood applies, right? Like, even literally when I use the term under the hood, is like, look at a car, right? Conceptually, okay, you have 4 wheels and an engine that gets you from A to B. That's not that hard to comprehend. Now, if you look at a modern car, the complexity is under the hood and in all the little details, and you wouldn't necessarily be able to or want to learn how to build the whole thing yourself. And I think that is, in a way, explaining or pointing why it is helpful to have people with experience, with expertise, or a team. Like I said on your website, and you have a whole team of different people, different specialties to make this all happen. And it's obviously, even though you said it's relatively simple concept, if I compare it to just straight out buying a property as an investment property for rent. Like our concept, we go out, we find suitable properties or get them offered by turnkey providers. We look if the price and the rent that they say is true or reasonable. Then we pay our down payment and get the funding, and they manage it for us, and we basically pay the mortgage and keep the difference.
Yeah, I actually think that's a phenomenal analogy, because the same thing with the car, if you will.
Right.
If you most people don't want to dive into learning how a car actually functions and works and all the nuances in there, but they do understand it conceptually, and everybody wants a car.
Yeah.
But the other thing is, if you were to actually go and build your own car, it actually would cost you more money, because each part on its own, without scale, all that work, all the software, all the trips that you need to go see the assets, all the meetings that you need to have, all the documents that you need to file, all of that costs money. And it's actually at scale where it's cheaper than if you were to do it yourself. So if somebody were to replicate our strategy, let's just say they had tens of millions or hundreds of millions of dollars to try to replicate a strategy, and they were just doing one-offs, those one-offs would be more expensive than having a team and a fund do it, because the economies of scale. So it's a perfect analogy for all of those reasons.
Yeah, absolutely. And I'm glad that you mentioned that, because I also think it builds a little bit of a bridge, when you were mentioning this with the one-off car, like Jim Foos came to mind, right? Like, if you're into cars, I don't know if you know about him, but anybody listening to us, if you go on YouTube or Google, put in Jim Foos, and you see how you can take a piece of junk and make it into a one-off special thing. that wins awards for the little bit of like 200, 300, 400,000 for the
Right.
right. So
Exactly.
but the bridge that you just built in that context is, if I take our example where we directly purchase the property, now obviously we can determine which one do we want to buy, who do we want to have the management with, how much are we willing to pay, how much are we willing to rent it for. Obviously, when we join your fund, that is kind of transferred over to you and your team. Can you tell us a little bit how much are we basically paying, in a sense, for not having to worry or deal with all of that and basically just hopefully enjoy the benefits?
Yeah, absolutely. So the fees, they're specified on the site, but it's a couple of percentage points. And in essence, what's really happening is that we get paid on an acquisition. So when we buy the asset, we take an acquisition fee. There's sort of a fee for management on the platform. And then there's all just the real estate services that we render. There's management of the properties, and there's a promoted interest. If we outperform, we share in the upside. So there's incentive for the fund to do the best as well for the investor, because they have incentive in that. So if you're familiar with Blackstone or Starwood, some of the larger, I'd say, non-publicly traded REITs out there, Blackstone is something like 300 million of assets under management in their real estate funds. We have a very similar model, almost identical to that. And so it's a very true and tried structure. And the whole point of it is, again, it's passive, right? So
right.
Even for someone who is into real estate and wants to own their own portfolio and buys a group, and so even that takes time. And so you might be investing hundreds of thousands of dollars, and then there might be moments where they're like, oh, I have $5,000 sitting around, $10,000 sitting around. That's not doing anything for me because I just sold the property. It's going to take a while before we buy the new one. You understand real estate. You're like, well, I would take 6.5% yield on a stable asset with 60% mortgage. It's low risk. The tenant is a triple B credit corporate tenant in, let's say, a dollar store. That's a very phenomenal product to have. And then when you take the depreciation and all the stuff that gets passed through from a REIT, that you don't have to pay taxes on, you're probably at 8-9%. That's on a hard asset. So without having to do anything except for click a few buttons. So I think it's being able to put money that's parked like a long-term savings account with much higher yields, but also not a function of the volatility of the market, and actually based on the tenant, the rent, the location, the land, things that are just more stable and can be analyzed with more predictability over a longer period of time. And so I think the product fits everybody, and different people have different use cases for it.
Yeah, I have a certain idea in mind that I would love to discuss with you. But before we get to that detail, can we just go a little bit into some of the numbers? So I peruse around the website, but I rather, for our audience, want to ask you, what is kind of like the minimum amount of money that somebody would have to invest if they wanted to join your fund? And then also, how easy is it to put money in or pull money out?
Sure, great questions. So we have two funds. There's an income-focused fund, which is the commercial real estate strategy that invests in single tenant net lease property. So that's a one property, one tenant. So dollar store,
right.
Shell gas station. That fund, because it's income focused, it's got a very low minimum. It's $100 minimum. So I mean, almost anybody can get started. And we made it low, not because somebody who only has $100 should invest in real estate and put it away. It's really for people to test the platform. Hey, that's low risk. Let me see if these guys are for real. Let me put money. Let me see if I get my dividend. We have an auto invest feature, which a third of our users use. So they say, hey, I'm putting a few $100s to start, but every month take out $100 or $200 as I get paid, and let me build my portfolio over time. And on that fund, we've paid now our 23rd consecutive monthly dividend. So even through the volatility in the markets, we've collected rent, we've paid monthly passive income to the shareholders. The other strategy, which we just launched a week ago, actually, is a residential fund that we've partnered with Boxabl, the modular home building company. And that's a very unique strategy. In fact, I don't think there is another strategy similar to it for an investor. So the housing affordability crisis now is at peak levels in the United States. We don't have enough homes. We don't have it's an availability issue, and and a pricing issue. So the cost of everything is going up. Boxabl is now creating the first time we've been able to see modular housing or manufactured housing being able to be shipped, because it's foldable and stackable, and that's the problem with manufactured housing. So why isn't your cars are built in a factory, your watches are built in a factory, your t-shirts are built in a factory, your house is not. And so they are working on streamlining that process to make it more sustainable, longer lasting, cheaper, all of those things. They're probably at the front of the line when it comes to this technology. We partnered with them. They chose to partner with us to give us the right to purchase 10% of their monthly production, which obviously now is not a tremendous amount, but enough for us to launch our first or second deal. Over time, it'll be a lot more, and we'll be able to facilitate taking these homes and actually creating a benefit for the homeowner by building these communities like a multifamily community, but with Boxabl modular housing. That'll be cheaper for the homeowner to rent, cheaper to produce, quicker to produce, should have a better return, we will see, for investors. And so that fund, because it's a longer term growth strategy that's not going to pay passive income day one, that the goal there is to have a higher return over a period of time through the development, increase appraisal when you're done with the project, plus rents. That's $1,000 minimum. And we did that because we said, listen, this is not something you're going to figure out day 1 or 2. So you really need to be able to stay in it for a while. And for higher return, you want to also be able to have enough money at play for it to be worthwhile. So we thought $1,000 minimum was the right number for that. So there's an avenue for everybody to invest. Elevate is the main answer.
Yeah, absolutely. And I think both numbers are actually very, very good numbers. I mean, I would have probably wished that on the Boxabl you would have done 500, but I explain why in a moment. To the point of, somebody puts money in. Let's take your example. They sold something. It doesn't even have to be anything with real estate, and they get $5,000 or $10,000. They put it in either one of the funds, and now I, for example, call them up as their mentor and say, hey, I have this great opportunity. It's gonna be $29,500 down payment and a little bit of closing costs. So now they might say, okay, I want my 10,000 that I put with Sachin plus what I have in my savings account to use for my next investment. How easy or hard is it to do that?
Yeah, so again, both the funds are a little different. So the commercial real estate passive income strategy fund, that's more flexible, that you can call for redemption when you need it. We pay redemptions back once a month. There is a cap on how much redemptions the fund can pay back in a year or in a given month. So if we hit that cap, then you're basically first come, first serve. You might have to wait till the next period or the period after. So far, since we've been around, we've hit the cap, I think, once during kind of the volatile times in the market where people needed money. And we've paid whoever wanted the money back, by the second month. But generally, people get their money back the month they ask for it. And that's because it's a percentage of how much we can basically give back or redeem in the fund. The point is that every month we're getting new investors. So if a handful of people need their money back, it's totally fine. It's very easy to do. The protections are there for all private REITs. I mean, this is not just us. Blackstone is the same thing. It's to protect the assets and all the investors from a run,
totally.
on the fund. And then, everybody loses. And so people are protected from that liquidity event, as well as sort of, kind of having it against them. So it kind of works both ways. And so with that, it should be a long-term investment. Obviously, one-off circumstances happen, but it's not a trading vehicle. It's not to park your money for 1 month or 2 months knowing, hey, I'm going to try to pull it out. Obviously things happen and you have access to your capital from that perspective, but it is a longer-term investment. It should be money that instead of basically putting in a savings account in a bank, you have in a hard asset that can appreciate over time and pays you monthly income. And that's kind of how we look at it. And kind of just
I would have thought you would say instead of putting it in a bond.
Yeah, that too. It depends on the bond, I guess. But one interesting stat, just to kind of answer that question a different way, a really amazing thing that we've found in the 2 years that we've launched the fund is that the account size per user has gone up 3 times since inception. So that's basically telling us the product is working, and as people are seeing their monthly income come in, or they're earning more money or saving more money, they're adding to their investment versus wanting to, pull it out. And that is really how this product should work. So that's the STNL fund. The Future of Housing Fund, which is with the Boxabl, because it's a longer term strategy and the money's getting put to work and there is an income, you're not in that for 3 months, because you're not going to have a return in 3 months. That's a year, 2 year, that goal is we develop an asset, we rent out the Boxables, we appraise the whole development when it's done. The appraisal value is significantly higher than what it costs us to develop it. And, you now see an increase in your share price, plus you're earning now the income in the future, but that's going to happen over time. And so that fund has a 1-year lockout. So when you invest in that fund, you cannot ask for redeeming your money for 1 year. And if you feel like that money cannot be locked up for a year, then that investment isn't right for you, or that amount isn't right for you. So, it's also being very upfront and kind of open with the investors and the shareholders that these are long-term investments, and they're there to build you wealth over time incrementally. They're not get rich quick, and they're not, trading vehicles. It's not the stock market. The price isn't going to move every second. Price might not even move every year.
Yeah, the reason for my question had nothing to do, and never really has anything to do with the price. But I think it's important for our audience, or for anybody like myself interested to maybe participate, what are basically the little dials that we need to be aware of. And especially I wanted to kind of, before we go into what I meant by having an idea in this context, kind of separate it a little bit from another thing that we are doing as a suggestion, and most of the audience members will have heard me say it or mention it, and that is using tokenized real estate for what I call cash flow parking. So, and just in a nutshell, cash flow parking would mean you have 1 or 2 or 10 or however many properties, but you're still in your development phase, you're building the portfolio, and you're not really consuming the cash flow because you're not at or beyond your time freedom point yet. So let's say it's $250 on this house, $300 and so forth. So tokenized real estate is really, especially like we do it with residential real estate, is nice because the token costs $50. So almost any kind of weird number increment that comes out of your cash flow, you can get at least 1 or 2 or 3 tokens. So that's one part. Then I believe on smaller numbers, when you're kind of like at a point where I am or some other people are, where they don't just have 1 property, but let's say 3 or 4. And that's why I'm very glad I said 500 would have been probably a little bit more nicer or easier for what I'm thinking. There is then the next point, besides having full control by literally straight out buying a 3-bedroom, 2-bath house, is kind of like in the middle is where you are, I would say. So $1,000 is probably requiring at least 3 properties or something like that to use the cash flow for this. But I think, and I want to ask you this in a sense, in a little more specific way, there are also investments, in my opinion, where you have to say, I would really like to be part of it because I don't see myself as an individual or a family ever to get to the capacity to do it myself on that scale. And that's why I'm so excited about your Boxabl relationship, because that's really, really a cool, very future-directed concept. Lots of people like tiny houses, but they are basically custom manufactured if you want to. So Boxabl is the next step in that direction. So I'm super excited to join you in this, even though if you say the minimum is 1,000, so you would have to have 1,000 cash flow per month to put in and keep putting in and so forth and keep it there. Now,
well, once you put in the 1,000, it's not 1,000 minimum every time. So it's $1,000 initial investment. You could then auto invest $100 or $200.
Well, however the cash flow is, right? Like sometimes
exactly. You're not stuck to 1,000 every time. It's just 1,000 minimum to start.
Okay, cool. That's a very important point. Now to this really cool, awesome relationship with Boxabl. First question I have to go for the remainder of our conversation into that. Are they yet, or how many, if they do, come off the line by now?
Yeah, I don't know the amount that they have produced, but I know they have Boxables ready.
I
and
mean,
sitting
like per
there.
month, you said 10% per month, so you know.
Yeah. So I think they're, don't quote me on the number, but I think they're producing 4 or 6 a day right now.
Oh, okay, so
Something
about
like
100
that.
a month or something like that.
Yeah, something like that. And I mean, that's our 10% minimum. And, you know, so we're looking at our first deal, so I can't say a whole lot about it. Don't know if
Well, we
have
gotta
one that
get
we like.
this.
Yeah, we have one like that we like. If that moves forward, we'll share more details. And you know, Boxable sort of also would be committed to working on that. It's something that we all, I think, like together. But you know, that'll happen the way it happens. The point for us is more, they are, if you, and I did a recent interview with Galliano that's on the Boxable landing page for us, but really they're very transparent about where they are. And I think my view is that, you know, one, obviously everyone out there now is trying to get clicks, and so making crazy statements is a great way to get clicks. And if something gets popular, you take the other side and you bash it and it's a scam and all of these things. And the reality is that what I love personally about the way Boxable is doing this is that they're doing something that no one's ever done. It's a massive undertaking, and they're very transparent. You can go to the tour, you can see they have a real factory with real people working in Vegas, and tour the factory yourself and see how they build these things. And these are patent products, and they're showing you how they're doing it. The second thing is, if you, in my interview, you hear Galliano of Boxable basically say, look, we are in R&D mode. We are trying to figure out, you know, how to build these room modules in a factory at scale at the cheapest price with the highest quality materials as possible. And so every few months, if you track their website, they've solved something else, and they're improving the efficiency and the cost and the materials, and they're constantly tweaking this. And this version 1, which was this full home casita, is not the vision. The vision is to be able to mass produce any room that can then be customized, whether you want to build a multifamily building, a single family story house, a complex, you know, through a factory, and order these units from them, because it's cheaper, faster than having to take a whole construction team and materials to a site and build under weather conditions and take longer and be more expensive. And if they're able to solve that, it's still unclear. They're really far along. But if they're actually able to solve that, to me, that's a completely massive paradigm shift in the largest industry in the world, solving the most expensive part of it, which is building the product, right? Well, maybe
absolutely.
half, maybe land is the other half.
I'm totally with you, Sachin, and it kind of almost reminds me, and I had wished many times, probably like, 5 years back or so. I'm a huge, everybody who listens to our podcast knows I'm a huge Tesla fanboy. But it reminds me at those interviews that people did with Elon Musk and the team at Tesla when they tried to figure out the Model 3 manufacturing, where you may have heard things like production hell as a term, or manufacturing hell, or this now famous statement, prototypes are easy, manufacturing is hard. All those things come totally to mind when we're talking about Boxabl. Now, there are a few other things, because you might actually deduct that we have done a little bit of research on this whole thing, because conceptually I find the concept fascinating. If I were 10 years younger, I would have probably tried to do something that, not the manufacturing, but the development of a site myself. So there are, for example, questions around the Boxabl units, from what I understand, about like 400 something square feet. So not everybody would want to live that small. And you said already they want to have different rooms. But have you heard anything in your interview, or when you went there last time, how far they are to actually allow, like, 2-story or attached multi-room boxes?
Yeah, I think the version 2 is the one that they're working on. That I don't know if the version 2 will be stackable. I'm not 100% sure, but I think it'll be connectable.
Yeah.
So
Well,
You know, I
because I
think
mean,
that's
if you look at what's considered a starter home, it's I
yeah,
think if you take it in a Boxabl calculation, it's basically 3 boxes, right? That
that's
would
right.
get you to something like 1,200, or maybe you lose a little when you connect them, something like 1,100 square feet. That's probably what a lot of people would be looking for, or maybe have two, but the ability to add a third one later, something like that, right? Which is kind of like an awesome concept. So that's one thing, and I'm glad to hear that they're getting there with version 2. Now, the other thing is two other things related. One is, from everything I've ever seen, is that you put them on some sort of a slab, right? So for your fund development, I would assume that you hopefully have already identified like a first property where you could do this. So would you then just go to regular contractors or have them pull permits and put slabs, or how would that look like?
Yeah, I'm not the expert on that side of it. Our CIO could probably answer that better, but you do need the foundation, and so yeah, that land will have to get developed for that. The part that is easy is that when you bring the Boxable, you're basically placing it in there, plugging into the electric and the water and all of that stuff, and unfolding the home, and you're ready to go. So the house is getting built in the factory. The land has to also be ready to be able to sustain a home. And each state or city, I believe, has different laws on those foundations and things like that. So the first parcel that we work with, which we haven't purchased, we are looking at parcels now. We would obviously make sure that the project can be done, using Boxables, and the land can be developed. So it is from that perspective, that part of the development project is somewhat the same. It's the house being built, which becomes significantly cheaper and faster. So
Right. Well, and I mean, I know that Galliano actually in one of the very early conceptual interviews had mentioned, and I don't know if that is like version 3 or 4 or 5, to also consider to have these basically covered both roofs and outside with solar panels and basically compostable toilets and all that kind of stuff. So how do you see the trajectory, like, let's say, for the rest of the year and into next year?
yeah, we are accepting investments. We've already had people come in. We had a wait list, and mild advertising, just sort of getting it out there, and we have people investing already. So that's great. We're looking to identify, like I said, our first deal, and once we announce that, we can kind of throw some projections on there and discuss sort of the plan around that deal. We'd like to, obviously sooner than later, but sometime this fall, this winter, we'd like to have that first deal identified. And then once we've identified it, we're able to buy the land, then that process starts. And the money from the fund will get used to buy the land, will get used to start paying for the services and start develop, it's a development project per se. And then all these investors in the fund, as that project is completed and developed and the houses are rented or sold or whatever it is, they will then get that appreciation from that development, which we'll obviously have some model of what we think it'll be, and then it'll be what it will be based on how much we can rent the unit for and what that finished development looks like versus raw land and the pieces that it costs to put it together. And then the income from the rent will also get sort of paid like the commercial REIT, net of all the fees and expenses, on a monthly dividend basis. So I think there's a great opportunity for investors. I think it's a great opportunity for us. And honestly, like, you said a lot of things about the future. You got to start somewhere, right? And so if, nobody bought the first Tesla, we wouldn't have electric cars now to the degree that we had. If Elon Musk didn't take on those challenges, or even I think of Amazon. Amazon started, as a bookstore. Is like the idea that they could ship overnight anything and everything that you could possibly want to order seemed really not realistic.
They
Just the
didn't even say
coordination, the
that
logistics of that.
they didn't even say that was their intention, right? Like they
Right.
just basically if I remember, Bezos at the beginning was only stating that they wanted to change the publishing industry.
Yeah, books.
And
Yeah.
one of the things, I mean, everybody quotes this bookstore thing, but I remember vividly that he was pointing out that so many people, great authors, are basically kept out of publishing, because any publisher makes it really hard to even get accepted, and then you have to basically print 5,000 books all at once. And if you're a small guy who just has a message, it's impossible. So that part was also, but you're right, getting from that conceptually to like basically the warehouse of the world.
Right.
But
and I think what happens is, as you prove things right, policies are always going to be behind, but they'll catch up. It's kind of like the government has to catch up to crypto because the world is taking crypto on in some shape or form. So when Boxabl gets there, and this is really how some decent portion of homes are getting constructed, they're going to have to readjust to zoning and license and permits and all of that, understanding that this is also benefiting their constituents. And so I don't see any of those things as sort of any real hurdles. I just think it's one step at a time.
Yeah, absolutely. I'm totally with you on that. And if we look a little bit like just on a national scale, I know you guys are, if I'm not mistaken, in Newport Beach. We have a place in San Diego. But fundamentally, if you look at, there are states out there where the only reason that they can afford not to charge income tax, like California, for example, does, is because they focus mainly for the income of the state operations on property tax, right? At the same time, as you mentioned in the beginning, the need, or basically the lack of sufficient amounts of housing, basically since the financial crisis, it got shut down so much. I think some people say we're short 6 million units or something like that by now. So if you take that combination, I could easily imagine that like places in Florida or Texas that, for example, don't have that and basically depend on property tax. And I know in the Austin area, not far from the Tesla factory, they have a first permitted kind of like, it's not really Boxabl, but very similar to Boxabl development. They're still making the units manually, basically by hand, and very beautiful, pretty expensive too. But taking, you always need a starting point, like you said. And for me, I'm very glad that you were with us and came to the show, because for me, this feels a little bit maybe on a smaller scale, like Amazon when it was still a bookstore or bookseller, or Tesla had not yet figured out how to make basically mass production. And I think that's also where Boxabl is. They have the concept, they've shown that it's possible. Now they have to figure out the manufacturing process. With all that being said, I think it's important, before we come to the typical 2 questions I always ask at the end of the show, how can people get in touch? I mean, you mentioned the numbers and stuff, but there's probably a little more. How do you suggest for that people that kind of caught the interest, want to maybe look a little further, how should they do that?
Yeah, the best place to go is our website, and then from there you can find all the other places to go as well. And we have obviously a support desk and a chat function, so you can ask us any questions. It's Elevate.Money, so it's not a .com, it's just www.elevate.money. And from there you'll see the avenues to check out the Boxabl fund, the commercial real estate fund, our blogs, our content, our support site, all of that stuff.
Yeah, and that stuff all looks very good. It's very intuitive. I've checked it out, so I can speak to that. I also find it wonderful that future forward-looking kind of approach is not hidden and only available for accredited investors, but with $100 or $1,000, people can get started. So that's wonderful. And I want to thank you guys for doing that. And as I always do for all our clients, I'm probably going to be the guinea pig that's going to try it myself, so I can speak about the experience. So the 2 questions I ask everybody have nothing to do with Boxabl or any of that is, if you could meet anybody, who would it be and why?
Oh, that's a great question. I'd have to think about that for a second. Actually, I have my answer.
Okay.
It's Naval Ravikant. I don't know if you know who Naval Ravikant is.
No, but tell us about it.
He is a kind of a tech entrepreneur, but also sort of life philosopher. And he, tweets, and he's got a podcast. He's been on Tim Ferriss. He's been on Joe Rogan. And a lot of the way I have started to structure my life, or the principles that I live by, some of them I came up by myself, and they match sort of his philosophy, and some things I was able to take from him. But I think he articulates a way of being, of living and being successful and happy, that I think can resonate with almost anybody. And it takes a lot of the stigmas away from not having success or not being happy or sacrificing one or the other. And it's just a phenomenal speaker. and mind that I think is I tell people that the book that was written about him, the Almanac of Ravikant, should be studied in college.
Okay, very cool. So we will put a link. He's probably on YouTube or on Amazon. We're going to put a link in the show notes so people can check it out and see what influenced Sachin to be how he is.
Yes.
The other question, the final one, is if you could go anywhere with a time machine, where would you go and why?
I might go back to, it's hard to say this because life happens the way it does, but I might go back to college. And this is just funny. There was later on in life when I got a little older and I traveled a little bit more around the country. I remember driving in Malibu by Pepperdine University. Mm-hmm. And I was like, wait a minute, there's a college across the ocean. What was I doing in New York City in like bad weather and traffic? And if I could do anything over, I probably don't know who I would be, but I wouldn't mind finding that out if I got to start over and started my life on a beach versus a city. So that's just a small little fun thing.
That's absolutely brilliant. I mean, I had the same reaction, especially when you come from, I think it's from the south. You kind of come down the hill and then you see the campus there. I had the same reaction, by the way, if you ever want to repeat it, is when you go and take a look at Santa Barbara City College.
Yes.
They literally have scuba diving and surfing classes and stuff like that as like electives. And then you can do marine biology, literally not leaving the campus to do marine biology, right?
Amazing.
So yeah, those two campuses, I went to school in Hamburg, northern Germany in the rain.
Right, so yeah.
Okay, very cool. Well, Sachin, thank you so much. And congratulations on the fund and getting that agreement with Boxabl, because I know even though they're still in R&D, like you said, there's hundreds of thousands of people who have pre-orders and commitments and stuff like that. So to kind of get a little bit in front of the line is awesome. And I think it will be exciting for anybody who joins you to see where this is going. I think it's not just a matter of do we make money with $1,000 investment. It's also maybe bragging rights to say, we already joined Sachin and Elevate.Money when nobody believed it's possible, something like that.
Yeah.
So our audience to realize, how often have we said, I wish I could afford Microsoft or Apple or Tesla or stuff when they were like $10 a share or something.
Yeah.
All right, cool. Well,
thank you.
Have a great rest of your day. Thanks again for making the time.
My pleasure. Really enjoyed the conversation. Thank you so much.
Yeah, thank you.